Balance sheet, which states the monetary values of all the assets that the company owns, all the liabilities that the company owes, and the equity of shareholders at the given point of time. Balance sheet items refers to all the records captured in the balance sheet in the form of assets and liabilities as on a certain reporting date. Financial analysts use it predominantly for the purpose of both accounting and financial modeling. The balance sheet items can be broadly divided into current assets, non-current assets, current liabilities, non-current liabilities, and shareholders' equity. Typically, assets are placed on the left-hand side and liabilities on the right-hand side. Cash and cash equivalents, as it is considered to be the most liquid form of assets. Accounts receivable, it represents the amount of sales that have been executed on credit and has not been collected as on the balance sheet date. Inventory, it represents the amount of money invested in the business in the form of finished goods, work-in-progress goods, and raw material. Prepaid expenses, it consists of all those expenses that a company has already paid but has not availed the services against the payment till the balance sheet date. Plant, property, and equipment (PP&E), it accounts for all the tangible fixed assets on a company's book. Examples of PP&E primarily include building, equipment, and land. PP&E is recorded on the net of depreciation. Intangible assets, it accounts for all the fixed assets of a company that is intangible in nature. These assets can be categorized into identifiable and unidentifiable intangible assets. Accounts payable, it represents the value of the money that a company is obligated to pay the suppliers for goods purchased or services availed on credit. The value of accounts payable and cash account decreases by the same amount as the creditors. Unearned revenue, it accounts for the revenue for which payment has been received but the service or product is yet to be delivered as on the balance sheet date. Notes payable, it includes the creditors that are not part of the accounts payable and are due within a year's time. However, there are instances where notes payable appear as part of non-current liabilities as their maturity is of more than 1 year. Long-term debt, this account represents the portion of long-term debt that has to be paid off within a year's time. Basically, the principal repayment due next year is captured under this head. Include as part of the long-term debt under non-current. Bonds payable, it represents the value of the bonds, which the company has issued, remaining outstanding as on the balance sheet. The bonds can be either coupon paying or zero coupon. Long-term debt, in CP Ltd is captured under current liabilities, then it represents the remaining portion of the long-term debt. Otherwise, it is the aggregate of all long-term debts, which primarily include term loans. Share capital, it represents the amount of money invested by the shareholders in the company. The share capital is categorized into authorized and paid-up share capital. Authorized share capital indicates the maximum number of shares that a company is allowed to issue, while paid-up share capital represents the actual number of shares that has been issued to the shareholders. Retained earnings, it represents the portion of the net income that is retained in the books of the company over a period of time. If the company makes a profit, then after dividend payment the remaining net income is added to this account.